are some of the concerns you're really hearing from investors now? Their fears, concerns?
Well, it's a combination of things. If you think about depositors first in the bank, a lot of their questions are about FDIC insurance and are my deposits insured? In our world where we also manage money for a lot of customers, there are concerns about where's the market going, and Greg addressed some of that. I think what we try and tell our customers is don't panic, number one. Don't do anything irrational that could cause you to regret that later on. If you've had a fairly steady course of investment over a period of time, you've been generally conservative, stick with it for the time being. I don't think there's any reason to panic and pull everything out of the market right now. So I think from the general consumer, with deposits in the bank, no worry. I wouldn't be concerned about that if you have an FDIC insured bank. But we're getting questions about that because people don't understand. And in some cases, the FDIC insurance is a little complicated in terms of how your accounts are structured and how much insurance you can actually build up. At Bank of Oklahoma, we have folks that can help you understand to make sure your accounts are set up properly to maximize the amount of insurance that you can get. But that seems to be the main thing people are concerned about today.
Okay, get a little more specific on the FDIC insurance. We know it's increased, but what did it increase from for savings, for retirement accounts?
Basically, it was $100,000, and it covered virtually all bank deposits, whether it's a savings account, a money market instrument, your regular checking account. Those accounts are all insured previously at $100,000, and now that's been raised to $250,000.
Now you're talking cumulatively. Say you have all
per account.
Per account.
So if I have an account individually, it's insured up to $250,000. That's one account holder. Then if my spouse and I have another account in both of our names, that account's also insured up to $250,000, and so on. So depending on how your accounts are structured, you can actually build up quite a bit of insurance on various bank deposits. And there's a lot of ways that we can help our customers even expand on that. At Bank of Oklahoma, we're a little bit unique in that we have a branching structure for our company that has given us charters in different states. So as a result of that, without going anyplace else, we can place deposits with other subsidiary banks of our own company in 7 different states to allow them to have even more insurance coverage. So that's an opportunity that our customers have through us.
We're hearing so much now about the credit markets being so tight. Who can get a loan? What's the profile of someone who can get a loan for a mortgage, who can get a loan for a car?
Well, it depends a little bit on liquidity is the biggest probably concern right now in the entire financial system. As liquidity has dried up because of large losses and the type of things that has happened in the financial industry, liquidity has dried up. So the apparent movement of funds back and forth between banks has slowed down, and the ability for large corporate borrowers to borrow large amounts of money through commercial paper and things of that nature have dried up just a bit. But an individual in today's environment, in an Oklahoma banking environment, which is very strong and solid today, that has good credit, can get a car loan, can get a mortgage loan, can get a small business loan. We have not shut off lending. Bank of Oklahoma, our lending so far this year is up 8% over what it was last year, so we have not shut the door on that. I would tell you, though, that an individual's credit needs to be very good. An individual company's credit needs to be very good in order to obtain credit today.
What's very good? What do you consider very good? FICO score?
Like a FICO score? Anything probably, I think the average FICO score in Oklahoma is around 690. Anything probably above 670 is probably going to be able to get auto loans and car loans and things of that nature, and that would kind of go up higher. The higher that FICO score, the better the rate structure probably will be for that borrower because the risk would be lower. But generally, above 670 is probably a number that you need to be looking at, unless you want to be going to what I call more of a subprime environment, which it would be available today if you wanted to try and get into it, but much more expensive.
I want you guys to be really clear about, what do you really tell people to allay their fears about what they hear on financial networks and when they see their stock prices down so much, because people are telling people, whether it's their brokers or whom, some of them are telling them, get out of stocks completely.
Well, if you have a long-term horizon, I would say doing whatever you've been doing relative to investing in your 401k or whatever you've been doing, a conservative, broad, diversified investment portfolio is probably the best thing to do. If your time horizons is very short term, then perhaps you should be much more liquid and remain in bank deposits or government treasuries or something of that nature. It really depends on the individual investor and what their time horizon is and what they're trying to accomplish, what their goals are.
When you say short term, like I'm approaching retirement in a year?
2 to 3 years.
2 to 3 years.
Right.
Okay.
Would be short term.
Okay.
And we view this as a crisis of confidence more than it's not a run. There's not a panic. There's not an outright panic. 500 points down is not that. Yes, it's not great, but it's not also a crisis either. And as long as we continue to take the right steps, the government takes the right steps, the company, the big corporations take the right steps to rebuild the confidence in the economy, then I think you'll see that turnaround happen fairly quickly.
And finally, gentlemen, how do you see the financial situation, the financial pullback affecting individuals and businesses in Oklahoma overall?
Well, I'd say to date we've been insulated a little bit from what's gone on in the rest of the markets. We have not seen the very unhealthy escalation of real estate prices over the last several years that has led to a lot of the subprime problems you've seen in other markets. So from that perspective, Oklahoma's been a little bit insulated. We've also had a good job market here throughout the state. Energy economy's been good. So we've had relatively low unemployment issues here, not a lot of foreclosures. So the Oklahoma economy has been good, and I think it's benefited the consumer to date at this point. And I don't think you're going to see a real credit crisis here at the consumer level because the Oklahoma banks are generally quite strong and have liquidity and have the capacity to loan money, and we will continue to do that. On a national level, will it creep in and impact us? Sure, absolutely. The liquidity problem around the country will affect large companies here. It'll affect perhaps states and municipalities in bond issues and things of that nature, which will have a trickle-down effect at the consumer. But by and large, I think we'll remain somewhat insulated from the rest of the markets, but not totally.
And Greg? To large investors, people interested in private banking?
Well, very similar to what Mark said. We view it as it's very opportunistic right now. You can buy municipal bonds. You can buy lots of bonds at what are great rates for investors. They're not great for the municipalities, but they're great rates for the investors. And so, as long as you have cash, there's great opportunities out there.
Are you seeing that excitement, though, that prices are so low now and this is an opportunity? Are you seeing that?
Yes, we have many clients who are out looking for opportunities right now, both on active businesses as well as in the markets.